Welcome to all of you Shiksha 360, and today basically we will discuss case study number 1, that is basically on the ALTMAN Z score. Clear? On the ALTMAN Z score. Clear? So this case study is basically theoretical based case study. Clear? Theory based case study. Basically in this case study basically we are able to understand what are the meaning of these 5 ratios. Clear? X1, X2, as basically we have discussed, Z is equal to 1.2 X1. Please write it, 1.2 X1 plus 1.4 X2 plus 3.3 X3 plus 0.6 X4 plus X5, or 1 into X5. Clear? You can say that, or just write it X5. Clear? So this is the value of the Z. Now what is X1, what is X2, what is X3, what is X4, what is X5? Clear? We are also able to understand like what is X1, what is X2. Clear? Now basically we are able to understand what is the general meaning of these things. Clear? What is the general meaning of all these things. Clear? Now basically we have to discuss one by one in detail. Clear? One by one in detail. Clear? So let's start our discussion. The basically ALTMAN model, basically for the US manufacturing firms, is a model that expresses the measure. Clear? Basically what it expresses, basically that expresses the measure of the default. Clear? Basically what it expresses, that expresses the measure basically of the default. So the model is based on the various accounting ratios. Clear? This model is basically based on the various accounting ratio, or basically we can say that 5 accounting ratios. So first one is, what is the purpose of net working capital upon total asset ratio? Is clear? What is the purpose of that? Is X1. Clear? This one is X1. What is the purpose of net working capital upon total asset ratio? Is clear? What is the purpose of net working capital upon total asset ratio? Is clear? So basically we have to go with one by one each of the options. So I request to all of you, please answer the question. So first one is basically we have to select the most appropriate option basically from the following. Clear? First question is to measure liquidity position of the firm. Second one is basically to measure reinvestment of the earnings of the firm. Third one is basically to measure the profitability of the firm. Fourth one is basically to measure the financial leverage condition of the firm. Clear? To basically measure the financial leverage condition of the firm. Clear? So basically here basically we have to discuss what is the purpose of net working capital upon the total asset ratio. Clear? So basically we will see that basically what is net working capital. So what is the formula of the net working capital? That is basically we can calculate basically from the current assets minus current liability. So basically what it tells that, clear? Basically what it tells us, current asset minus current liability, basically it tells us the short-term liquidity. Short-term liquidity. Clear? Basically what it tells that the short-term liquidity basically present in any firm. Clear? Short-term liquidity, or basically we can say that the short-term liquidity basically of any business. Clear? So what it tells that basically short-term liquidity of any business. Why basically short-term? Because it is say that the current assets minus current liabilities. Clear? So here basically we will use the word current, not long-term. Basically we will use the word current. So basically it relates to the short-term. Clear? It relates to the short-term. Clear? So net working capital is equal to current asset minus current liability. Clear? Current asset minus current liability. Clear? So basically it means that the short-term liquidity of the business. Clear? So now let's discuss what is the purpose of net working capital upon total asset ratios. Clear? First of all, basically we have to go through all the points one by one. First point says that basically to measure the liquidity position of the firm. Second term says that basically to measure the reinvestment of earnings of the firm. Third one is basically to measure the profitability of the firm. Fourth one is basically to measure financial leverage condition of the firm. Clear? Fourth one is basically to measure financial leverage condition of the firm. Clear? To measure financial leverage condition of the firm. Clear? So what is the correct answer basically? As basically we know that basically net working capital is equal to current asset minus current liability. So basically in simple terms we can say that basically it tells the short-term liquidity of any business. Clear? It terms the short-term liquidity of any business. Clear? So the correct answer is option number A, that is to measure the liquidity position of the firm. Clear? To measure the liquidity position of the firm. Clear? So this is our answer. Clear? You have to understood. Clear? What is the meaning of all these things? Clear? Only after that basically we are able to solve the numericals. Clear? Only after that basically we are able to solve the numericals. Now move to the second question here. So now same basically here basically what they are asking, what is the purpose of retained earning upon the total asset ratio? Is clear? What is the purpose of basically retained earning upon total asset ratio is clear. What is the purpose of basically retained earning upon total asset ratio? Clear. So what is the meaning of retained earning? Clear. So basically same four options are there. That is to measure the liquidity position of the firms, to measure the reinvestment of earnings of the firm, to measure the profitability of the firms, to measure the financial leverage condition of the firm. Clear. So retained earning, it is what? So retained earning, basically these are the portions. Clear. So these are the portions of profit. Clear. So basically these are like profit. Clear. These are the portions of profit which are available. Clear. Basically that are available, or we can say that which are available basically for what? Retained earning. Basically these are the portions of profit. Clear. Or we can say that profit which are available basically for investment back into the business. Clear. Basically which are available for investment back into the business. Clear. Basically which are available for investment back into the business. Clear. That is basically known as the retained earning. Clear. That is basically known as the retained earning. Clear. So basically these are the portions of profit. Clear. Or basically we can say these are the portions of the profit which are available. Clear. Basically which are available basically for the reinvestment. Clear. Basically here I will write investment, not basically for the reinvestment back into the business. Clear. For the reinvestment back into the business. Clear. So basically where these funds basically may be spent, these funds basically may be spent on or basically as working capital, capital expenditure. Clear. On all these things. Clear. Or many other ways. Clear. Basically these funds can be spent upon, basically we can say that on the working capital, capital expenditure. Clear. On all these things. Clear. So basically what is the correct answer now? So the purpose of the retained earning upon total asset ratio is basically to measure the liquidity position of the firm. No, to measure the reinvesting of earning of the firm. Clear. Basically for what? To measure the reinvestment of earning of the firm. Clear. So this one is the answer here. Clear. So this one is the answer. Okay. So what is the answer? That is basically to measure the reinvestment of earning of the firm. Clear. To measure the reinvestment of earning of the firm. Clear. So this one is the correct answer. So please tell fast. It is clear to all of you basically how basically we are able to answer these questions. Clear. Just you have to understand the concept. Clear. What is the meaning of that term? Only after that basically you are able to answer the question. Clear. No need to cramming here. Clear. No need to cram here. Just you have to understand the word. What is the meaning of that? Clear. These are the questions basically which are considered to be most typical. Clear. Most typical. So now move to the next question. Clear. What is the purpose of earning before interest and tax divided by total asset ratio? Clear. What is the purpose of earning before interest and tax upon total asset ratio? Clear. So now same option. So basically earning before interest and tax, EBIT. Clear. So what is the EBIT? Basically it is company's net income. Clear. So basically we can say that it is company's net income before basically income tax and before basically income tax expenses, we can say that, and interest expenses deducted. Clear. Before basically income tax expenses and interest expenses deducted. Clear. So wait a minute. Deducted. Okay. So what it tells that? Clear. Basically it is used to analyze. Clear. Basically EBIT basically used to analyze the performance. Clear. Basically it is what it is used for. What basically it is used for to analyze. Clear. It is used to analyze the performance. It is used to analyze the performance of a company core. Clear. It is used to analyze the performance of a company operations. Clear. Company core operations. Clear. It is used to analyze the performance of a company's core operation. Clear. So basically that are basically we can say that these are the basically company's net income. Clear? Basically for what? Before the income tax expenses or and the interest expenses deducted. Clear? And the interest expenses are deducted. Clear? So what is the answer here? So please tell fast what is the answer here of this question. That is the purpose of the earning before interest and tax upon the total asset ratio. Clear? Earning upon interest and the tax upon the total asset ratio. Basically it tells the profitability of the firm. Clear? Basically for what? To measure the profitability of the firm. Clear? To measure the profitability of the firm. Clear? So this one is the answer here. Clear? Basically for what? To measure the profitability of the firm. Clear? Next one is, that is fourth one, that is X4. Clear? X4. So basically the purpose of market value of equity by the book value of long-term debt. Clear? Basically the purpose of the market value of the equity basically by market value of equity upon book value of the long-term debt ratio. Clear? Upon book value of the long-term debt ratio. Clear? So what is the answer here? Clear? What is the answer here? That is basically, we know that basically A option, B option, C option, basically we have already discussed. So D1 is the answer here. Clear? D1 is the answer. That is to measure the financial leverage condition of the firm. Clear? To basically measure the financial leverage condition of the firm. Clear? Now basically we have to understand. Clear? Basically we have to understand what is the meaning of that. Clear? Basically what is the meaning of that is market value of equity. Clear? What is the meaning of the market value of equity? Clear? Sometimes they will ask question on the basis of that. We are able to answer the question only if we are able to understand. Clear? So market value of equity, MVE, simple language we can say that. Basically it is the market capitalization. Clear? So basically it is similar like the market capitalization. Clear? Market value of the equity, basically it is similar to the market capitalization. Here market value of equity, basically it is similar to the market capitalization basically. And how we can calculate? Basically we can calculate by multiplying it. Clear? Basically by multiplying total share. How we can calculate? By multiplying it basically total shares into current price per share. Clear? Total share into current price per share. Clear? So in this way basically we can calculate the market value of the equity. Clear? Basically market value of the equity. Clear? So basically in general language basically we can say that basically what is the importance of that? Clear? Basically what is the importance of that? Basically it represents like basically you want to buy IPO of any company. Clear? Basically you want to not IPO, basically you want to share of any companies. Clear? So basically you will check that basically market value of equity. Clear? Basically how much is the market capitalization of that company. Clear? So basically it represents how investors think a company is worth today. Clear? How investors think a company is worth today. Clear? Basically how much is the financial value of that any company. Clear? So basically why basically we will invest in that. Clear? Basically why basically we will invest in that, so that basically we will earn profit. Clear? Why? So basically what they will check here. Clear? This is one of the part basically which they will check here, that is market value of equity. Clear? This is market value of equity. So the correct answer is basically it is used to measure the financial leverage condition of the firm. Clear? Basically financial leverage condition of the firm. Clear? So please tell fast all the points basically which we have discussed till now. It is clear to all of you. What is the meaning of all these terms one by one? Clear? What is the meaning of all these terms one by one? Clear? It seems to be very straight one questions. Clear? But it takes a lot of time to understand what is the meaning of all these things. Clear? Basically what is the meaning of all these things. Clear? Now only last one ratio is left for you. Basically what is the purpose of sales upon total asset? That is basically known as X5. Clear? That is basically known as X5, and it has multiplying factor 1. Clear? So what is the purpose of sales upon total asset? Clear? What is the purpose of sales upon total asset? Clear? So basically it generally means that what it the meaning of that? Basically sales upon total asset, basically it means that how effectively, basically for the investor, basically this tells how effectively companies, basically company using their assets. Clear? Using their assets, how effectively basically company using their assets basically for what? To generate the sales. Clear? To generate the sales. Clear? So basically what it tells basically how effectively the company using their assets. Clear? Basically how effectively the company basically using their assets basically for what? Basically to generate the sales. Clear? To generate the sales. and on the basis of that, clear, basically they will compare the ratio basically with the respect to the other firms, and basically they will get which firm is better, clear, basically which firm is better. So the purpose of sale upon total asset is basically to measure the liquidity position of the firm. No, this is basically net working capital. To measure the reinvestment of earnings of the firm, this is also not. To measure the profitability of the firm, this is also not. Basically, to purpose of sale upon total assets, basically to measure the sales generating ability of the firm's asset. Clear, basically how basically we can say that basically in which way basically we are using your assets. Clear, basically in which way basically you are using your assets to get the more returns. Clear, to basically get the more returns. Clear, or to generate the more sales. Clear. So basically in simple language we can say that basically how you are utilizing your assets. Clear, basically how you are utilizing your assets to generate the more sales. Clear, basically for what? To generate the more sales. Clear. So basically this is the overall understanding of all these 5 ratios. Clear, basically what we have discussed: x1, x2, x3, x4 and x5. Clear, basically we have discussed in detail what is the meaning of all these ratios. Clear, basically what is the meaning of all these ratios. Clear. Now basically we have to discuss one simple numerical on the basis of that. Clear. Now basically we have to discuss one simple numerical on the basis of that, and after that basically we will discuss a little bit typical case study. Clear. Now basically we will move toward the second case study. Clear. That is case study number 2, same on the ALTMAN Z score. Clear. That is same on the ALTMAN Z score. Clear. So basically what it says that, clear, basically in that basically we have to calculate the ALTMAN Z score. That is Z is equal to 1.2 x1 plus 1.4 x2 plus 3.3 x3. Why I'm writing again and again? So that you are able to remember 0.6 x4 plus x4. So here basically they have given different factors, and all these factors basically they have given in the amount that is in the crores. Clear. Amount is given in the crores. Clear. So first one basically we have to calculate x1. X1 is basically net working capital upon total asset. Clear. So basically in this way basically we have to calculate the x1. So net working capital. Clear. So here basically what is the net working capital? That is current asset minus current liability. Clear. Current asset that is given as 1000, current liability that is 500. So 1000 minus 500 upon total asset is to be 2000. So 500 upon 2000. Clear. Basically 500 upon 2000 basically which we have to calculate here. Clear. Basically which we have to calculate here. Basically which we have to calculate here. So 500 upon 2000 that is 1 by 4. Clear. 500 upon 2000 that is 1 by 4. So basically we can say that x1 is basically 0.25. Clear. Basically x1 is basically 0.25. Clear. So here basically x1 that is basically what is the value of x1? That is 0.5. Clear. So basically here basically we will get the value of x1 that is 0.25. Clear. Now next one. Clear. Now next one basically we have to understand that is what is the value of x2. Clear. Basically what is the value of x2 here? What is the value of x2 here? So basically how we can calculate x2? So basically x2 is simply, what is x2? X2 is basically retained earning. Retained earning upon total asset. Please tell fast what is the value of x2 upon total asset. So retained earning. Clear. So here basically they have also given retained earning. Clear. Sometimes basically they have given retained earning, or sometimes basically they have given profit. Clear. The value is here same. That is 900. Clear. That is to be 900. Clear. The value of both are to be same. That is 900. Clear. So basically how we can calculate retained earning upon total asset. Clear. So retained earning here 900 upon 2000. So 900 divided by 2000. It comes out to basically 0.45. Clear. So x2 basically comes out to basically here 0.45. Clear. So hope it is clear to all of you. Basically x2 here that is 0.45. Clear. Now next one. Clear. Now next one basically we have to calculate x3. Clear. X3. So basically how we can calculate x3? Clear. X3 basically EBIT, earning before interest and tax upon total asset. So basically earning before interest and tax. Clear. That is basically profit plus before interest and tax. So basically we have to add it here interest, and basically we have to add here it interest tax also. Clear? Basically we have to add here it tax also. Clear? That is profit before earning before interest and tax. Profit plus interest plus tax upon total asset. Profit here is basically 900, interest here is 200, and tax paid here is 100 upon 2000. So basically 1200 upon 2000. It is to be 3, it is to be 5. So 3 by 5 divide, it comes out to basically 0.6. Clear? 3 by 5 basically it comes out to basically 0.6. Clear? So that is x3 here, it is to basically 0.6. Now next one is basically x4. X1 basically market value of equity upon long-term liability. Clear? Upon long-term liability. As basically we have already discussed here. Clear? Liability. LIABILIT. Clear? As basically I have already discussed in the previous case study here. So market value of equity, basically how basically we can calculate basically total shares into the current price per share. Clear? Into the current price per share. Clear? Basically on the basis of that, basically we are able to calculate the market value of equity. Clear? Market value of equity, basically how we can calculate basically total shares into the current price per share. Clear? Basically into the current price per share. Clear? So basically how we can calculate that. So basically total share here is equal to 50,000. Market value of one share. Clear? Basically market value of one share is 400. Clear? Market value of one share is 400. So here basically when we are doing that 50,000 into 400. So basically we will get 2, 1, 2, 3, 4, 5, 6, 7. Clear? This much value basically we will get here. Clear? Basically this much value basically we will get here. Clear? So in simple language basically we can say that 2 into 10 raised to power 2, 4, 6, 7. Clear? Simply 4, 6, 5 into 4, 20. Total 7 zeros basically we will get here. Clear? So basically if we like this way, 10 raised to power 5 into 10 raised to power 2. Clear? So 10 raised to power 5 basically we can say that 2 lakh, 20 lakh, 200 lakh. So basically we can say that this comes out to basically 2 crore. Clear? This basically comes out to be 2 crore. Okay. Hope it is clear to all of you. Basically how I will reach basically with respect to 2 crore. Clear? 10 raised to power 5 is basically 1 lakh. And 10 raised to power 2 is 100. Clear? So basically we can say that if this one is factor, clear, 2 into 10 raised to 5, basically we can say that 2 lakh. Now basically if we consider 2 zeros more here, clear? So basically we can say that 200 lakh. 200 lakh basically we can say that 2 crore. Clear? 2 crore. Clear? So basically x4, basically how we can calculate x4 is equal to 2 crore upon long-term liability. Clear? 2 crore upon long-term liability, that is 300 crore. Clear? That is 300 crore. So basically write it here, basically 3000, sorry, not 300, basically they will have mentioning 3000. So 2 upon 3000, that is basically 6.67 into 10 raised to power minus 4. Clear? 6.67 basically into 10 raised to power minus 4. Clear? So basically we can say that 0.00067, that is basically comes out to basically 6.67 into 10 raised to power 4. Clear? So last one basically we have left with only one factor, that is x5. Clear? Basically we have left with only one factor, that is x5. So basically x5 basically what is sales upon total assets. So what is sales here? Sales basically we can say that sales here basically 1000 crore. Total asset basically we will know that 2000 crore. 1000 crore upon 2000 crores. So it is simply 0.5. Clear? So it is simply 0.5. Clear? So basically in the nutshell, basically we can say that basically we are able to get all the values, that is x1, x2, x3, x4 and x5. So x5 here 0.5, x4 basically 0.0067. x3 I will get here from that. So first of all, x1 that is 0.25, x2 0.45. Clear? So please tell fast if I am at any place I am wrong. Clear? Sometimes basically the calculation will be wrong. So please check, tell fast. X1 is 0.25, X2 is 0.45, X3, what is the value of X3 here? That is 0.6. X4 0.00067, X5 is equal to 0.5. So basically how we can calculate Z1? Z is equal to, how we can calculate Z is equal to 1.2 X1 plus 1.4 X2 plus 3.3 X3 plus 0.6 X4 plus X5. So 1.2 into 0.25 plus 1.4 into 0.45 plus 3.3 into 0.6 plus 0.00067 into 0.6. Last one is X5, that is 0.5. So 1.2 into 0.25, it comes out to basically 0.3 plus 1.4 into 0.45, it comes out to basically 0.63. 3.3 into 0.6, it comes out to basically 1.98 plus 0.00067 into 0.6, it comes out to basically 4.02 into 10 raised to power minus 4. Clear? 4.02 into 10 raised to power minus 4. Clear? So basically we can say that 0.0004, simple language we can say that, plus 0.5. Clear? So plus 0.5. Clear? So what is the answer here? Clear? So what is the answer here? So just add plus tell fast. What is the answer here? 0.63, 1.98 plus 0.5. So basically we will get here that is 3.41402. Approximately we can say that 3.41. Clear? 3.41. Basically we can say that this one is the answer. Clear? So here the value of the Z is basically greater than 1.81. So here what is the value of Z? Clear? So here the value of the Z is basically greater than 1.81. Clear? So basically we will discuss only two criteria. In one case the value of Z is basically less than 1.81, and in the another case basically we will say that basically the value of the Z is basically more than 1.81. Clear? More than 1.81. Clear? So basically we will discuss two things here. Here the value of the Z is basically more than 1.81. So basically when the Z, here basically we will get Z is equal to 3.41. So we can say that Z is greater than 1.81. Clear? So what is the meaning of that? Clear? What is the meaning of that? Clear? So higher the value of the Z. Clear? So higher the value of the Z, lower is the risk. Clear? So lower is the default risk. Clear? So lower is the default risk of the borrower. Clear? So lower is the default risk of the borrower. Okay. So this one is the answer here. Clear? So this one is the answer here. Clear? So here basically one thing, basically sometimes student will face issue under that. That is what is X4. Clear? So X4. So X4 basically I have already tell that is market value of equity. Clear? Market value of equity. Market value of the equity. Clear? So that is basically we can say market capitalization. Clear? So what is the market capitalization or basically market value of that company? Clear? Market capitalization. So basically how we can calculate market capitalization? Clear? So please go through that question. This one is. So basically how we can calculate the market capitalization or basically market value of the equity, that is basically total shares present of that company in the market multiplied by the current price of that share. Clear? Basically multiply the current share price of that share. Like basically we can say that there is a simple form, that is Rohan Manufacturers. So basically how we can calculate? Basically these have 1000 shares in the market and the price of each share is rupees 450. Clear? 450. Clear? So basically just simple basically we have to do that. Clear? Just simple basically we have to do that. Clear? Just simple basically we have to do that. multiply. And here basically some students basically face issue. Basically here they have not 50,000 shares at the rate of rupees 400 each. Clear? At the rate of rupees 400 each. Clear? All these values are given in the crore. All these values are basically given in the crore, and basically they are given in the rupees. Clear? They are given in the rupees, and there is not any crore mentioned like 50,000 share at the rupees of basically 400 crore each. Not this way. Clear? Basically one share is basically, we can say that rupees. Clear? That is basically given in the rupees. Clear? So basically how we can calculate total amount of the shares? Basically 50,000 into 400 rupees. One share is 400 rupees. So basically 50,000 into 400 rupees. So basically the total value of the share that is available in the market is 2 crore. Clear? Basically is 2 crore. Clear? It's a 2 crore. These are basically like, basically we can say that long-term liability. Here basically 4,000 crore. Here basically 4,000 crore. Clear? So basically here it is given as 4,000 crore. Basically here basically we will write it as 3,000. So basically write it as 4,000 crore. Clear? Here basically they have given 4,000 crore. Long-term liability is basically 4,000 crore. Clear? So basically please correct according to that. Clear? Please correct according to that. 2 crore. Clear? 2 crore basically I think all of you are able to understand. Clear? Please correct this one value. Clear? Please correct this one value, or 3,000 crore. Write it basically if we are 3,000 crore. So basically please correct it here. Clear? Make it as 3,000 crore. Clear? Make it as 3,000 crore. So here basically we have written as 3,000 crore. Clear? By mistake I think there is 4,000 crore. Clear? So basically please correct it as 3,000 crore. Clear? This one is a 3,000 crore. Clear? Hope it is clear to all of you basically how we can calculate all these things. Clear? Basically how we can calculate all these things. Clear? Long-term liability is basically 3,000 crore. Clear? Just basically you have to use all these values. Clear? Basically just you have to use all these values. Clear? Just you have to use all these values. Clear? And you are able to solve the question. Clear? You are able to solve the question. Long-term liability is basically 3,000 crore. Clear? All these values basically you have to use it. Clear? And on the basis of that, basically we will calculate the Z. Clear? Basically we will calculate the Z. Clear? Basically we will calculate the Z. Clear? So this is basically the basic discussion of the ALTMAN Z score. Clear? This is basically theoretical based case study, basically how to calculate the Z. And basically this is basically totally basically we can say that theory based, and this is simple numerical based. Clear? Simple numerical based. Clear? Now basically we will discuss one more question. Clear? Now basically we will discuss one more question, that is calculate the working capital. Clear? So basically here they have given some term, that is equity share capital per share, this one amount, 12% preference share capital, that is this one amount, fixed assets, current assets, fictitious assets, current liabilities, debentures. Clear? All these things basically they have mentioned here. Clear? All these things basically they have mentioned here. Clear? Now first question basically in the question. Clear? Basically what they have say that. Clear? Basically calculating the working capital. Clear? Basically calculating the working capital or net working capital. Clear? So basically how we can calculate the net working capital? Net working capital basically current asset minus current liability. Clear? So net working capital here basically it is equal to the current asset minus the current liability. So basically it is equal to the net working capital. Clear? So current asset, here their current asset basically 2 lakh. Current liability is 1 lakh. Clear? So subtract it from that. So basically net working capital comes out to basically 1 lakh. Net working capital comes out to basically 1 lakh. Clear? So sometimes basically they will give these types of question also. Clear? Sometimes basically they will give these types of question also. Clear? So calculating the working capital, that is net working capital is current asset minus current liability, that is 1 lakh. Clear? 1 lakh. Now move towards the second question, that is calculate the total assets. Clear? Calculate the total assets. Clear? Basically how we can calculate the total assets? Calculate the total assets. Clear? So total asset basically we will calculate fixed assets plus current assets. Clear? Total asset basically we can calculate from the fixed assets plus current assets. Fixed asset is basically 3 lakh. Current assets basically they have given 2 lakh. Overall basically they are given as 5 lakh. Basically they are given as 5 lakh. Clear? So basically this one is the current total assets. Clear? Total asset, that is fixed assets plus current assets. Clear? Fixed asset basically 3 lakh. current asset, basically they have given 2 lakh. Clear? So in this way, basically we have to calculate all these types of questions. Clear? Basically we will provide you some numerical based questions or case studies in the group, clear, in your BFM group, clear, in the upcoming days. Clear? So let's basically, the motive of this session basically just to understand basically how to solve these questions. Clear? How to solve this question and what is the meaning of all these ratios. Clear? Basically what is the meaning of all these ratios. Clear? What is the meaning of all these ratios. Clear? So I request to all of you, please try to understand all the technical meaning of all these terms. Clear? So thanks to all of you for joining this session.